So in the last lecture, we started the topic of profits and gains of business or profession, which is our third head of income. In that topic, we discussed section 28, which is the founding section of PGBP. Section 28 tells us which incomes are taxable under the head profits and gains of business or profession. Section 29 tells us how to compute the income from business or profession for the purpose of paying tax to the government of India. So what is the way to compute income under the head PGBP? Within section 29, I discussed 6 different categories. Those are framed by me only. Act doesn't clearly gives these categories. That is only for the understanding, easy understanding, so that the structure of PGBP becomes clear. Like section 30 to 35 covers the expenses which are allowed as expenses which can be deducted while computing business income for the purpose of computing business income as per the provisions of IT Act, Income Tax Act. Section 30 to 35. In these, the expenses have their own name, own conditions, and own calculation method. Then we have section 36 expenditures, which are also allowed as deduction while computing taxable business income. If I'm using the word business income by default, you can assume that it is business income or professional income. So it can be your business or it can be your profession. So if I'm using somewhere the word business income, it does not mean that that is not allowed as deduction while computing professional income. By default, business means profession also. Section 36 also covers the expenses which are allowed as deduction while computing business or professional income. But calculation work under section 36 is less as compared to the calculation work involved under sections 32, 36, 35, 37. Expenses covered under section 37 are also allowed as deduction, and section 37 doesn't give the name of expenditure except one. Within section 37 there are 2 subsections. First subsection is general subsection, which does not give you the name of the expenditure. It only gives you conditions. Any expenditure which fulfills those conditions is allowed as deduction. But within section 37 there is one more subsection, which is talking about advertisement expenses. So let us keep it simple for the time being. Let us not discuss different subsections of section 37 for the time being. You just remember that 37 covers the expenses which are having some common conditions to be fulfilled. Any expenditure which fulfills that condition is allowed as valid expenditure while computing business income or professional income. Then we have some 3 special sections which technically disallow the expenses. All expenses which are covered either under section 30 to 35 or 36 or 37, those expenses also need to be carefully checked as per the provisions of 40 clause A, 40 capital A and 43B. Those expenditures which are valid as per section 30 to 35, 36 or 37 needs to be checked carefully. Are these expenditures covered under 40 clause A, 40 capital A and 43B? And if covered, are these expenditures meeting the conditions of these 3 sections, 40 clause A, 40 capital A and 43B? If meeting the conditions, then only these are allowed as deduction, otherwise not. These 6 different categories I covered in the last lecture. Other than these 6 different categories, some special sections are also there. 44 AD, 44 AE, 44 AB, etc. Those I will cover after covering these 6 different categories. Till this point, if the discussion is clear, or do you remember this discussion? If yes, please raise your hands. So now let us start my first expenditure, section 3030. So let me share with you the website of the tax department, and now let me give you an idea about the way to proceed further in this topic, PGBP. I hope the website is clearly visible. These are the sections of IT Act. So after section 29, you can be having a look at section 30, rent, rates, taxes, repairs, and insurance for buildings. Because in a business or profession, it is possible that you have a structure, physical structure, you have a building. So in the building in which you are doing business, you might need insurance for building. You might be incurring some repairs on building. You might be paying some taxes on building. You might be paying some rent or rates on that building. So this is what the provision of rent, rate, taxes, repairs, and insurance of building. As I told you, section 30 to 35 covers the expenses with name and having some own conditions also. So these are some points written. I'm not discussing this in detail for the time being. Similarly, next section is section 31, repairs and insurance of machinery, plant and furniture. Now, in a business, you don't only need a physical infrastructure, you might need plant and machineries also. So if you have taken some insurance on those machines, then it is valid expense. If you are incurring some expenditure on those machines, it is a valid expenditure. I can debit that expenditure on the debit side of my P&L account. So now let me start sharing my screen and let us start discussing with first expenditure, section 3030. So we are continuing PGBP. That was the discussion in last class. These categories 1, 2, 3, 4, 5, 6. Those categories I simply made to make sure that your concept or the structure of PGBP becomes clear in your mind. Now I will start discussing these as far as their provisions are concerned. So I'm starting directly with my first section, section 30. So these are the headings technically. Section 30. It is related to buildings in which you are doing your business. Rent, repairs, insurance, etc. related to the business, related to the building. Section 30 says it is allowed as deduction. That's it. Such expenditure is allowed. There is no problem. We allow that expenditure. So when any assessee will prepare the P&L account, that person can show on the debit side for the purpose of taxation, building rent. It's allowed. I can debit that. Building insurance. It's allowed. I can debit that. There is no problem. So we are just learning on the debit side which expenditures can be shown by me if I'm computing the business income or professional income as per the provisions of Income Tax Act 1961. Sometimes what can happen is that if this is my building, maybe some portion is used for non-business purpose and some portion of that building is used for business purpose. Then in that case, do remember that only the rent, repair, insurance, etc. on building of this portion is allowed as reduction. If in your building, your some portion is used for non-business purpose, for example, 30% portion of my building is used for non-business purpose, then 30% of rent, repair, insurance, etc. on building is not allowed when I'm computing my business income or professional income. Only that much expenditure is allowed in respect of that portion of building which is used for business purpose. This is what my section 30 is. Section 31. As I shown the act, it is related to plant and machineries or furniture. In a business you need furniture, in a business you need machinery. So whatever is the repair, insurance, etc. of these plant and machineries or furniture, that is also allowed as valid expenditure, there is no problem. Under section 31, any repair, insurance, etc. related to plant and machinery or furniture is allowed as deduction without any condition involved. P&L account, if suppose plant and machinery, insurance, it's allowed, there is no problem. Furniture, repairing expenditure is allowed, there is no problem. But in both these sections, when you discuss repair, do remember that I will discuss only current repairs, not capital nature. Capital nature expenditure is not allowed. Current repairs, repair which is of current expenditure, small expenditure, not heavy nature, whose benefit I can get in the next many years. So capital repair is not allowed. Capital repair is not covered. Capital repair is not covered under section 30 or 31. And repairing which is of capital nature, capital means whose benefit I will get or will be indirectly received by me in my coming many years, then I don't get the benefit of that expenditure under section 30-31. It does not mean that I will never get the benefit. There may be other sections, but in section 30 and 31, you need only current repair. That's it. This is what my section 30 and 31 is. You need to learn basically the expenses which are allowed to be shown as an expenditure when I compute my taxable business income on my or taxable professional income. You need to simply learn this for the time being. When there will be a full-fledged question, then I will start applying all these provisions numerically. There might be some expenses which are shown in the debit side of P&L account, but I will find that it is possible that I find that those expenses are not allowed as per the provisions of Income Tax Act. And how do I check that? That I can check only when I'm having the knowledge of entire PGBP. So I need to learn these expenses like section 30. There is no need to learn this section. You can ignore this section number. There is no need to learn this section. But rent on business, rent on building which is used for business is allowed as deduction, that you must know. Insurance expenses incurred to insure the building which is used for business purpose is allowed as deduction, that you must know. Insurance to secure the plant and machinery which is used for business is allowed as deduction. That thing you must know. And how do you know these things? When you learn these conceptually. So for the time being, I have discussed with you two expenditures which you have to learn only. Might be these expenses can be used in any numerical. Next now, third, this is the main expenditure, and my next 1.5 hour discussion will be only on this expenditure. This is the main expenditure, depreciation. Section 32. You need to learn this by section number also. I will spend my next 1.5 hour only on this point, depreciation. Section 32. It is considered as one of the main expenditure of PGBP. Almost in every business, you will find this expenditure on the debit side of P&L account. Section 32 is my third expenditure. which is considered as one of the most relevant expenditure for the purpose of computing taxable business income or taxable professional income as per the provisions of Income Tax Act 1961. Depreciation. Let me, before proceeding further, let me share with you the Act section. Till this point, if the discussion which is going on is clear, please raise your hands. If you have understood that what structure is going on or how we will proceed, we are basically learning to know those expenses which can be shown on the debit side of P&L account. That's it. Please raise your hands if you are getting some sense of the structure of PGBP.
Sir, can you switch to the previous slide once?
Yes, yes. Is it?
Yes, sir. Thank you.
Okay. Shall I move on or shall I? Or I need to stay here.
You can move.
Oh. Now let me share with you the website. Let me share with you section 3 to 32. Section 32, click it, depreciation. Now it is lengthy section, as you can see. It's very lengthy, but I will discuss with you only some points. Section 32, subsection 1, what it says. So I want to not only tell you the concept, I want to make sure that you can read the act yourself in future. In respect of depreciation of clause 1, buildings, machinery, plant or furniture being tangible assets. Clause 2, know-how, patents, copyright, trademark, licenses, franchisee or any other business or commercial rights of similar nature being intangible assets acquired on or after 1st April 1998. I can say that depreciation is allowed on two types of assets as per the Act. Which are those assets? Tangible assets. Within tangible, only building, machinery, plant and furniture. Only building, machinery, plant or furniture. So building is 1, machinery, plant 1, furniture 1. So technically three tangible assets. And some intangible assets which must be acquired on or after 1st April 1998. That means any intangible asset which has been acquired before 1st April 1998, you cannot claim depreciation on that intangible asset. This date 1st April 1998 was not used in clause 1. So there is no date when these have been acquired, but if you want to claim depreciation for intangible asset, you must make sure that you must have acquired it on or after 1st April 1998. Now this is in italic, that means it is latest amendment. Click 84 and it is written in the footnote, inserted by Act number 13 of 2021 with effect from 1/4/21. So with effect from assessment year 21-22, these words have been added, not being goodwill of a business or profession. Goodwill of a business and profession is also intangible, but you cannot claim depreciation in case of goodwill of a business or profession. Is this concept clear? Please raise your hand. Are you getting some sense that how you should read the act? When I read the act, how I interpret the provisions? That date is written only in clause 2, 1st April 1998. So that is only for intangible. For tangible assets, no date. Any date of acquisition is valid for the purpose of charging depreciation. Please raise your hand if the language of the act is now clear, or after so many months of discussion, now at least you are a little bit comfortable, or you will not be afraid in future. If you have been given the act to read, you can make a judgment, or you can try to now at least read the act. Now next point, owned. Every word, single word in the act is relevant. Owned If you want to claim depreciation, you must be owner of these assets, wholly or partly by the assessee, and used. If these are not used for business and profession, you cannot charge any depreciation. So, to claim depreciation, I must use this for the purpose of business and profession. If yes, then the following deductions shall be allowed. So now which deductions will be allowed? Clause 1. In the case of assets of an undertaking engaged in generation and distribution of power, such percentage on the actual cost thereof to the assessee as may be prescribed. So in case of those industries which are into the business of distribution of electricity, power, then percentage rules will tell, but the method is actual cost. So straight line method, as the name suggests, actual cost. So depreciation will be charged on straight line method basis only in case of those undertakings if that undertaking has acquired the assets and if the undertaking is engaged in generation of power or both generation and distribution of power. In case of any block of asset, such percentage on written down value thereof as may be prescribed. So other than the undertaking which are into power generation or power distribution, then written down value method is followed. And if you read carefully clause 2, it does not use the word asset, it uses the word block of asset. So it's a combination, it's a group of asset. Only in case of power generation undertaking or only in case of distribution of power undertaking, you use straight line method and there is no block of asset, there is no group of asset. Separate assets will be charged or depreciated at separately. But other than power generation undertaking, separate assets are not charged, or depreciation is not charged on separate assets. Depreciation is charged on block of asset, and the method is also what? Written down value. So two new sentence or words or concepts have arisen here. That what is this block of asset and written down value? As I told you, my concepts of income tax act might be different totally from the concepts used in accountancy. So my written down value might be different from that written down value which I am using in general sense or as per accounting standards. Something is written. I will simplify these languages, but at least you must know that how act is written. See, provided further. It is my exception number 2 of this depreciation concept which I am reading, where an asset referred to in clause 1 or clause 2 or clause 2A or the first proviso to clause 2A. Can you tell me what is clause 1 about? Which asset? This asset. Asset which is referred to in clause 1 or this asset referred to in clause 2 or what? Or what? Or what the act says? Clause 2A or the first proviso to clause 2A. So it must be written somewhere below. Go below, and this is my clause 2A or this proviso to clause 2. So when you read the act, you have to read the entire section. Like explanation is written above, but the clauses are written below. That for all these 4 clauses, whether it is clause 1, that means power generation asset, or clause 2, return on value block of asset, or clause 2A, which I have not yet taught you, or first proviso to clause 2A. In all those cases, if the asset is acquired by the assessee during the previous year and is put to use for the purpose of business or profession for a period of less than 180 days in that year, then the section under this subsection, can you tell me which subsection I am talking about? Can you tell me which subsection? Subsection 1. It is my subsection 1. So deduction under section 32 subsection 1 in respect of such asset, which asset which has been acquired during the year and put to use for less than 180 shall be restricted to 50% of the amount calculated at the percentage prescribed for an asset under clause 1 or clause 2 or clause 2a as the case may be. I hope it has become very technical for you, but the reality is that in future you have to read these technical points. So I'm giving you a little bit comfortability, or I'm showing you the true situation which you will face after 4 or 5 years. So better you start moving from the books towards the act as soon as possible, because ultimately this language is only admissible in a court of law. Anyhow, there are so many things, as you can see, which are written here. I will simplify these points for you, but you must know from where we will be reading this point. Then one explanation 2 says, the purpose of this subsection, return down value of the block of assets shall have the same meaning as in clause C of subsection 6 of section 43. So to know the meaning of return down value, I will go or take the help of section 43 subsection 6 clause C. I will show you that also. So many things are written here. I will simplify these for you. But you must know that in reality you have to refer it when ultimately you have to take some decision. Anyhow, so let me for the time being show you a little bit glimpse of section 43 also. And after this, I will now simplify the provisions for you. Section 43. Let us click section 43. This is what my section 43 is. Section 43 only gives you definitions of certain terms relevant to income from profits and gains of business or profession. Section 43. Return on value is written in 43 subsection 6. Go directly to subsection 6. This is my subsection 6. Return down value means, and it was written clause C. Directly come to clause C. This is what clause C. In the case of any block of assets, within this clause I have subclause 1. This is item A. So subclause 1. In respect of any previous year relevant to the assessment year commencing on 1st day of April 1998, the aggregate of the return on values of all the assets falling within that block of assets at the beginning of the previous year and adjusted. Of course, it is a little bit technical, but can you tell me, if I ask you simply the meaning of line number 1, can you tell me what this first line says? Can anyone try to make an attempt and tell me that what is the simple meaning of this line 1? Read it carefully and try to tell me the meaning of this line 1. Anyone who can try? Can you tell me this line 1 is talking about which assessment year or which assessment years? Is this line 1 talking about only 1 year or more than 1 year? What this line 1 wants to convey?
Sir, more than 1 year.
More than 1 year. Any other answer? It is only 1 year, not more than 1 year. Read it carefully. And what it says, in respect of any previous year relevant to the assessment year. No, it is not saying assessment years. Assessment year commencing on 1st day of April 1998. So which is the assessment year which is commencing on 1st day of April 1988? Can you tell me which is the assessment year which is commencing on 1st day of April 1998? It is assessment year 1998, 1988 and 1989. That's it. So clause 1 talks about computing the block of asset for which assessment year? Assessment year 88, 89, that's it. But I am studying assessment year 21, 22. So when I'm studying assessment year 21-22, then that means this clause, this subclause 1 is not applicable to me. I will go down. And this is my subclause 2 and carefully see what it says. In respect of any previous year, relevant to the assessment year commencing on or after, in subclause 1, it was written only on first day. Now it says on or after 1st April 1989, and this will be applicable to me because this subclause 2 gives you the definition of written down value for all the years which are starting or which will be with effect from assessment year 1989-1990. So I am in assessment year 21-22. I will compute my written down value as per this subclause 2 of clause C of subsection 6 of section 43 just to determine written down value. Are you getting some points or have you got the concept? Not what is written. I'm not telling you the meaning of WDV. I want to tell you how in reality you refer the act and then you take a decision. Is it clear? If yes, please raise your hands. It is technical, but easy things anyone can do. So there is no value of those people who only do those things which everyone can do. You must be a little bit different and must work a little bit hard as compared to others. Yeah, it is difficult, it is technical, but reality is what? It is the act and it is admissible. That's it. So now you are into that age where now you should move forward or you should come out from the comfort zone and start reading a little bit those things which are original. These might be difficult or these might be easy, and everything is difficult only till that point of time till you don't understand it. The moment you start understanding it, you will find it easy. Okay, so I wanted to give you a little bit idea of what is written about section 32 in the act, and now from my book or as per my language, now I will start simplifying section 32 for you. But in reality, you must know that you have to read the act yourself to gain confidence in any subject. That's it. So let us start simplifying section 32, and now you will learn these points. But I wanted to show you an idea or give you an idea about how in reality section 32 operates. So let us start writing something on section 32. So one thing is sure that it is section 32 which talks about how to compute depreciation. So let us now start writing about depreciation. So I'll frame some different subheadings. It will help you in learning the concept of depreciation. So my A point, applicability. When it is applicable, this is the starting of depreciation. It is applicable. If you remember that section 32 subsection 1, then you can take a decision. When it is applicable. So conditions for applicability. The assets are owned by the assessee. This is first thing, owned by the assessee. Used for the purpose of business and profession. Used at any time during the previous year. Not only for business, but at least in your year. Used at any time during the previous year. So what is my previous year? My previous year is 2021. I am concerned about this previous year. And this asset can be what? Tangible. Tangible includes building, comma, machinery and plant, comma, furniture. or intangible. Or intangible, like know-how, patent, copyright, etc. if acquired on or after 1st April 1998. These are the 4 conditions which must be satisfied if you want to claim depreciation. So if above conditions are satisfied, depreciation is allowed as an expenditure which you can show as an expense which can be deducted while computing PGBP income. That's it. This is first thing. If you have written it, please raise your hand. You must note down these points. If you have not written, please write it and raise your hands. Next point, method of computing depreciation. What are the methods of computing depreciation? Two methods, straight line and return on value. Straight line method is not in our course. If I talk about method, as I shown you the act, there are two methods, straight line method, actual cost, or WDV. Straight line only in case of undertaking which are in power. Undertakings in power generation oblique distribution. Power generation, or only those industries can use SLM. Power generation or an end distribution, SLM. For other undertakings, you have only WDV. So I'm not discussing SLM because that is not for our level. We will discuss only WDV, and in WDV, I must know that I will compute the depreciation on the basis of block of asset, not single asset. It's a block of asset multiplied by rate of depreciation of that block. So you don't charge depreciation of single asset. In return on value concept, you will merge all the assets having same rate, same name. Like if I have 10 buildings having 10% rate, I will merge all the buildings and then I will apply depreciation. Suppose I am having 6 plant and machineries. Some are having depreciation rate of 15%, some are having depreciation rate of 40%. I will merge plant and machineries 50% at one place. I will merge plant and machineries 40% at one place, and then I will charge the depreciation. So there is no single asset depreciation concept as far as WDV is concerned. You merge all the assets having same rate and same category. So total block of asset into rate of dep, or I'm not writing rate of depreciation. Let us make it simple that in WDV you charge depreciation on the basis of block of asset. That's it. So what is block of asset now? It is my point number. Same continuing. I'm not making any separate heading. What is block of asset? What do I mean by block of assets? The definition is in section 2 clause 21. Sorry, 2 clause 11. But it is very simple. I'm not showing section 2:11 from there. Let me simplify it. It is same like this condition. Same. This is what nothing but block of asset. That there are two categories, tangible and intangible. So whatever is my fourth condition in applicability, same thing is block of asset. Intangible. Intangible. What is the block of asset? Assets having same rate becomes the block. Similarly, in case of intangible also, assets having same rate becomes the block. Like in intangible, suppose I am having plant and machinery A, 40% depreciation rate, plant and machinery B, 15% depreciation rate, plant and machinery C, 40% depreciation rate. So can you tell me how many blocks will be made? If these three plant and machineries are there, can you tell me how many blocks will be made?
Sir, 3.
2. 2 blocks. One block is of plant and machinery having 40% rate. And which blocks will be covered here? Plant A and plant C. Another block will be plant and machinery 15% rate. Which block will be there? Only block. Sorry, which plant will be there? Block B. Please raise your hand if the way of preparing block of asset is clear. Same name, same rate. Now, in the same example, suppose I say that, okay, let me ask you another example, simple example. Suppose I have one building X having rate of depreciation 10%. I will tell you from where I will see the rate. I have one furniture Q. The name of furniture is Q, 10% rate. Plant and machinery R, 15% rate. Building M, 5% rate. Plant and machinery X, sorry, not X, P, 15% rate. Can you tell me how many blocks will be there?
So
How many
5.
blocks? 5 or 4?
Sir, 4.
4. This is one block. This is another block. Though rate may be same, but those two are different. One is building, another is plant, another is furniture. I cannot merge it. Not only the rate, but category also must be same. This 5% building, third block, and this plant and machinery and this plant and machinery, 4 blocks. Please raise your hand if it is clear that I will make 5 blocks in this example. So you must know how the blocks are made. Those from section C, if you are having any other lecture right now, you can leave it and you can listen to it later on. I have no problem. That's your decision, of course. Please raise your hands if you know that how the block will be made. Please raise your hands if the block formation is clear. It will help you in determining the correct depreciation. Don't merge different rate, and within the same rate, category also must be different. Don't merge furniture 10%, building 10%. No, furniture is separate, building is separate. Next point. Now, what do you mean by written down value? This is the concept of block. I have discussed with you. First thing, applicability. You must remember it. I told you that section 30 to 35 comprising those expenses which are a little bit heavy in calculation also. So you can see the detailed calculation of section 32. First, applicability. If yes, then method. Method is easy because in our course only WDV. So for determining the depreciation as per WDV, I need two things: block of asset and return on value. Block of asset, I made you understand. Now, next discussion is what is this return on value? Or meaning of return on value. Do you remember which section is this meaning of return on value? I showed you the act. Do you remember where this WDV was written?
Sir, section 43.
Section 43. Which subsection? 6. Clause C, subclause 2. But let us not discuss those. In fact, even this section is not required for you to be learned. Okay, but I am writing it only for your clarity. Otherwise, you are not supposed to learn the sections. So, in case of, so there are 3 different categories of WDV. For those assets which are acquired during the previous year, assets acquired during the previous year. What is my previous year? 2021. So for those assets, what is WDV? For assets acquired before the previous year, so these are for single assets. This is an asset which is acquired during the previous year. That means if it is acquired during 2021, then WDV is equal to actual cost. If you have acquired it first time in your year, then whatever is your actual cost, that is WDV. If that asset has been acquired before 1st April 2020, then what is the WDV? Is equal to actual cost minus depreciation allowed to him earlier. Depreciation allowed on that asset. So WDV depends. So for which asset you are computing the WDV? So the question which you should ask from yourself is, am I computing the WDV for the asset which I have acquired during 2021? If yes, then actual cost is WDV. If this asset is not acquired during the year, it was acquired last year, then WDV is actual cost last year minus depreciation already which has been allowed on this asset. The difference is WDV. And when you are merging the assets, different assets, so in case of block of assets, which is relevant for me? In case of block of assets, what is WDV? That I'll explain on next page because it is a little bit lengthy. So that is I'm writing on next page. For fresh asset which is acquired during the previous year, WDV is equal to actual cost. For any asset which is acquired in earlier year, suppose this asset is acquired 4 years ago. So 4 years ago, whatever was the actual cost minus depreciation which you have claimed in those 4 years, the difference what is left is WDV. And in case of block of asset, when you have not one asset in the block, when you have so many assets in the block, how do you compute WDV? That I will write on the next page. Please raise your hand if the concept till now is clear. Very good. So now let us discuss calculation of WDV in case of block of asset. This is what my discussion is, which is pending for the next page. So let us start it. Let us move it to the next page. So I am computing WDV for block of asset. Next page. So basically it is WDV to be computed in case of block of asset. Now what is your previous year? 2021. So you must be having this year in your mind always. Then you write WDV of the entire block. On 1st April of the previous year. So what is my previous year? 2021. So that means I will check the WDV which is on 1st April 2020 of the entire block. In this I will add what? In this what I will add? Can you tell me logically what I will add? What I will add?
Sir, asset purchased during the year.
Yes. But since the heading is WDV going on, so I should add WDV of the asset which is purchased during the year, and WDV of the asset purchased during the year is nothing but equal to actual cost. So I might be writing actual cost, but in reality you must know that it is nothing but WDV. So actual cost or WDV is one and the same thing if there is any asset which is acquired during your year. So actual cost of the asset acquired during the previous year. Acquired. So what is your previous year? 2020. So all the assets which you have acquired in this previous year, you add it. So technically you are not adding actual cost, you are adding what? WDV. But that is equal. If you call it actual cost or WDV, there is no change. You add it. And can you tell me what is the WDV of the block of assets on 1st April? Suppose there are 4 assets in this block on 1st April, which I have purchased 4 years ago or 5 years ago. Can you tell me how I have got the WDV of these assets?
After subtracting the depreciation.
Yes. Yes. So that means I have used this point also. Suppose I have 5 or 7 assets which I have acquired before the previous year. What WDV is there? Actual cost minus depreciation already allowed. So while computing block of assets WDV, I have used this point as well. I have used this point. This value minus net sale. Net sale of the assets of this block during the previous year. Which is my previous year, 2021. So in this 2021, whatever assets I have sold which are of the same block, you deduct this. And what is this? This difference is nothing but WDV of the block. Can you tell me which date? Logically, which date? Which date?
31st March.
Yes, logically, my year is complete, so it is the date of 31st March of the previous year. Since my previous year is 2021, so by default it is 31st March 21. This is this WDV. On this I will compute depreciation. And can you tell me how depreciation logically will be computed? This closing value, I can say closing WDV of the block multiplied by what? Multiplied by what?
Sir, percentage.
Yes, multiplied by 100% correct. Rate of depreciation of this block. It is just like any asset. Cost multiplied by rate. Same is the case. I'm multiplying closing WDV multiplied by the rate of depreciation of this block. This is that depreciation which I will show This is my depreciation under section 32. That's it. I will show this on the debit side of P&L account. And the moment I deduct depreciation from this closing WDV, can you tell me what difference I will get or what value I will get? It will become WDV of the block of asset on what? On 1st April of the what?
Next year.
Next previous year. That means this will become the WDV of 1st April 2021, and this chain goes on. And now after this previous year, 21-22 will start. Till here, previous year, 2021 is going on. Before that, previous year, 1920 was going on, and the chain goes on. That's it. Please raise your hand if the concept is clear. I hope now it is easy, but the same thing if you read it from the act, it will become of course very technical, but you must try to read from the act. If not now, at least whenever you have any free time, try to read it, especially if you want to be an expert in any legal area. If you are interested in doing LLB or interested in joining judiciary or administrative post, you must read these acts. Anyhow, till this point, there is no problem, I think. Please raise your hands if depreciation till this point is clear in your mind without any doubt. Please raise your hands. Next point now. So now, until I know WDV now, but I still don't know what is the rate of depreciation in different blocks. So let me tell you now the rates of depreciation. So you have to learn those rates. Because now WDV you can compute, but still you do not know what is the rate of depreciation, so you cannot compute depreciation. So now rate of depreciation. So what is going on? So the structure must be clear that for the time being, you must know that applicable conditions, that is the first step before you start charging depreciation. Then it is telling you method of depreciation. So within method WDV. WDV, when you say WDV, within WDV, you need block of asset. So block of asset is clear, tangible or intangible. Then you need WDV. Exact, what is the meaning of this WDV? So what is the meaning of WDV of block of asset? That structure now you have. But in this structure, still what you are not having is this rate of depreciation. So till you know the rate, till you do not know the rate of depreciation, and till that point of time, you cannot compute depreciation exactly. So next subheading. So main thing is method of computing depreciation is going on. Within this, I discussed with you B1. B1 is only to make sure that we are within the method block of asset. I discussed with you B2, meaning of WDV. Now I'll discuss with you B3, rate of depreciation. So within the method, everything is going on. Okay, this structure must be clear in your mind. So rate of depreciation of different blocks. So this heading is rate of depreciation of different blocks. Once you will understand this theory of depreciation, then you will find it very interesting to compute depreciation. Rate of depreciation of different blocks. So how many blocks total you have? Can you tell me how many blocks you have? Can you tell me now practically how many blocks are there with you? Only 4. Broadly only 4. Within that there can be different subcategories of course, but broadly you have 4 blocks. 3 tangible and 1 intangible. So category of blocks. Category 1, building. And block of asset and ROD. So building is my first block. Within building, there are three types: residential nature buildings, office buildings, and buildings which are of having wooden structure. Residential buildings are having depreciation rate of 5% flat, office building 10%, wooden structure building 40%. So main heading is building. Within building, there are three different blocks: 5, 10, 14. Furniture is my second block. Flat 10%. In machinery and plant, technically Act uses the word machinery, plant, though we can call it as plant and machinery also, but as per the Act, I'm using the language machinery and plant. Now within this, different special buildings, so I will tell you only relevant ones. Motor car. Only these you must know. Otherwise, there are many different blocks. If I show you the rules, then you'll find this list is very long list. But I will tell you only that much which is relevant for your level. So motor cars, other than those used in a business of running them on hire. So those traveling companies whose business is to give these motor cars on hire charges, for those this rate is not applicable. Other than those, in different companies, in every company you are having motor car and which are not used only for the business of running them on hire, but for their official purpose. So in those cases, 15%. Buses, and taxis used in a business of running them on hire. In such business, there is more use of car. So the value goes down rapidly as compared to the situation when normal hire car is not given for hire purpose. Used in the business of running them on hire, 30%. Pollution control equipments, such thing. Life-saving equipments, air pollution control equipments, water pollution control equipments, computers. Only relevant one I'm writing, computers. In these case, 40%. Other than these, remaining category of plant and machinery, other plant and machinery, flat, 15%. That's it. This is the category of machinery and plant. And now intangible. Category 4. Intangible assets. If acquired, do you remember the date? April 1998. Flat 25%. Know-how, patent, copyright, etc. So still the computing depreciation going on. That's it. These 3 points you must note. Building, furniture, machinery and plant, intangible asset. The real list is a long list, but for your level you must remember these rates at least. Please raise your hand if this rate is also clear. Now you can compute depreciation easily. If you know the name of the assets, when these have been acquired, not easily till I discuss with you numerical. I cannot say that you can compute easily, but at least now you have a structure in your mind that how we will proceed in computing depreciation, which I can show on the debit side of P&L account. So I need the name of the assets. I need the dates when these have been acquired. I need the rates of depreciation, and I will apply the concept. Please raise your hand if till this point the depreciation theoretical framework is clear in your mind. Please raise your hands. Any problem you can ask. Till now, if there is any problem, you can ask. Next point. Now, I don't know whether you remember or not. When I was reading the act, when I was showing you the act, somewhere 180 days concept was also used. That depreciation was restricted to 50%. Do you remember that point somewhere that when I was reading something, 180 days, 180 days, these words were used? Do you remember that point? Please raise your hands. Okay, so what that point was, that now I will simplify. So still the discussion or the subheading which is going on is method of depreciation. Within this method, I have discussed block of asset meaning, I have discussed WDV meaning, I have discussed rate of depreciation, and now I'm discussing B4. B4, that 180-day concept, what was that? And see, Income Tax Act is not accounting standard. So don't confuse it with your accounting standards knowledge. That is separate purpose, that is having separate purpose, this is having separate purpose. B, half of the rate of normal depreciation. That means whatever are these rates, these will exactly become half. By default, these will become half. By default, these will become half. Half of the rate of normal depreciation is applicable on those assets which have been acquired during the previous year and put to use, not only acquisition, and put to use for less than 180 days during that previous year in which these have been acquired, and put to use for less than 180 days during that previous year in which these have been acquired. If there is any asset which is acquired in my previous year 2021 and it is put to use for less than 180 days in that year, so on that asset I will charge exactly half of the rate of whatever is the normal rate of depreciation. I will make you understand this concept with the help of a numerical later on, but I hope you are getting little bit idea. I'm not expecting 100% clarity on this point till I discuss this with the help of a numerical, but at least now you must be having this structure in mind that in accountancy, if you use the asset for 10 months, you charge depreciation for 10 months only, not for 1 year. But in Income Tax Act, We don't have any month concept. We have flat 180 days. If any asset is used for less than 180 days in the year in which it is purchased, you charge exactly half rate. If the asset is used even for 7 months in that year in which it is purchased, charge full rate. So on month basis, I'm not going to charge depreciation under income tax act. That is the only concept here. Less than 180 or 180 or more than 180. So there are two categories: less than 180, second category 180 or more. Less than 180 half rate, 180 or more than 180 full rate. That's it. Numerical, I will discuss this. I will discuss the numerical of this point later on. Next point. Still method of calculation of depreciation going on. B5 now. Additional depreciation. So whatever are these rates, something extra is also available, which is over and above this rate. And remember, depreciation is always the beneficial provision for the assessee because it is the expenditure which is shown on the debit side. So let me tell you the concept of additional. Additional means above, over and above this rate. B5. Still method of calculation going on. B5, additional depreciation. Conditions. So technically, this was that section. I don't know whether you remember or not. When I was reading the act, I told you some exception where it was mentioned that where the asset is covered under section under clause 1 or 2 or 2A. This was 2A, which I have not shown you in the act. But when I was reading something, this 2A came. This was nothing but additional depreciation condition. When you can claim additional depreciation. First point. New machinery and plant. New machinery and plant acquired and installed on or after 1st April 2005. If you are into manufacturing sector, if you are into business of manufacturing of anything, any article, anything, if you are in a manufacturing industry, that's it. Then if these cases are satisfied, if above not cases, if above conditions are satisfied, 20% of actual cost, if above conditions are fulfilled or satisfied, then whatever depreciation normally you are entitled to claim, you will claim, but something additional, 20% of actual cost is allowed to you as additional depreciation. Why this is allowed? Because new technology, new machines help saving the electricity. New technology, new machines will help reducing accidents in the factories. New machinery, new plants will help in reducing the noise pollution, might be water pollution. So whenever you use old technology, there is a loss to the society. You take the example of car. You are using any car which you have purchased around 15 years ago. That car will leave more emission of carbon dioxide, etc., than compared to a new car, because new technology has come which helps in improving the average. It also helps in reducing the pollution also. Always in any area, new technology brings new benefits. Now we are using LEDs. Earlier we were using bulbs which were consuming much more electricity than now LED is used. So this provides an incentive indirectly to the business houses that they should replace the old machines and they should bring new machines, because they will be able to claim more depreciation. Because why they will replace it? So of course they will be having their personal criteria also for replacing, but this at least will motivate them to replace it as soon as possible. So in the tax act also, income tax act also, some points are given to motivate the people to come forward to do something which are for the betterment of the society. This is additional depreciation. And do remember some note on additional depreciation. It is over and above normal. First point. This depreciation is over and above You have to calculate normal as per the previous method. This is separate. It is over and above the normal depreciation which is allowed. Which is allowed to the assessee. So it has no relationship with the previous table of calculation. You compute it separately, and this is separate calculation. I will discuss this with the help of numerical, of course. Here also that B4 is applicable. Half of the rate of additional depreciation. Can you tell me half of the rate of additional depreciation will be how much percentage?
10%?
Yes, of course. If full rate of additional depreciation is 20%, then half rate is 10%. Half of the rate of additional depreciation is allowed in respect of that asset. Can you help me completing this line? This line is allowed in respect of the assets which have been acquired during the previous year and put to use for less than 180 days. For less than during that year. Same thing, just like when the normal depreciation is admissible at half rate in respect of debt asset which has been acquired during the previous year and put to use for less than 180 days. In this case also, if any new asset has been acquired during the previous year and put to use for less than 180 days, then you charge half rate in that year. And remaining half you will charge in next year. And remaining half and balance half will be charged next year. Next year. Some note on additional depreciation. Point number C. Cases when additional depreciation is not admissible. This I'm leaving for self-study. Cases when additional depreciation is not allowed. This is self-study. There are some cases where additional depreciation cannot be claimed, though machine might be new. Self-study. Read it from the Act or from my book or from any other material which you have. But you have to read it. There are 5 to 6 situations where you cannot claim additional depreciation. So you must try to read it. And last point. Additional depreciation is not allowed if optional taxation scheme is adopted by the assessee. Additional depreciation is not allowed. If optional taxation scheme do you remember this section?
So 115 BAC
is opted. If assessee is interested in opting to pay tax under optional taxation scheme under section 115A, that assessee should forget about additional depreciation. That's it. This completes the concept theoretical as far as depreciation is concerned, and let us wind it up numerically also. Depreciation. Please raise your hand if this theory is a little bit clear. Please raise your hand if this concept is a little bit clear. Let us start now. I'm using specs only to save myself from these rays, otherwise my eyes are okay, fortunately, in spite of reading and studying a lot. That is only, I use specs only just to save from excess use of these rays which I get from laptops or screen. Anyhow, let us compute now. Let us solve some numericals. I will discuss one numerical from my book, and on that basis, I will make so many assumptions that the depreciation point will become clear in your mind. Let us discuss this numerical. Only one numerical is more than sufficient. It is given on page number 6.7. Those who are having my book, please don't see the book. Just don't see the solution, only see the book. Others, please, if you don't have the book, please take the screenshot of this page which I am showing, page 6.7 example. Okay, if you take the screenshot, you can also take the screenshot of that, those cases which I was talking about, which you should self-study. On the same page, you can see that case, those cases also where additional depreciation is not allowed. So it will help you. So rather than self-study from there, you can read it from this page. It is very simplified language, and let me share it with you. Is the screen visible now?
Yes, sir.
Okay, please take the screenshot where if you see heading number 3, it is cases in which additional depreciation is not allowed. So you cannot do it from here. Otherwise, my concentration is to discuss with you an example. Let us have 2 minutes break. We will come back within 2 to 3 minutes. Let us take 2 to 3 minutes rest, and I'll come back. Till then, you please take this screenshot. Please raise your hands if you are here. Arya, please raise your hands if you are here. Okay. I hope others are also here, because once I start discussing this, then all other different changes will be related to this understanding. So you must be here. I hope still on the screen you can see the numerical, and let me start reading it. Let me start reading it. The written down value of the block of machinery and plant, rate of depreciation 15%, consisting of 3 plants A, B and C on 1st April 2020 was, the WDV of these 3 plants on the first day of my previous year was 10 lakh. Machine D was acquired as well as put to use on 7th July 20 for rupees 3 lakh. So this is the new machine which is acquired in my year and is put to use in my year, 3 lakh. It is put now, acquisition date and put to use date can be different. I might have purchased the asset today, but I have used it after 1 month. So it's possible. But in case of machine D, it is same. Acquisition date and put to use is same. Now, is it put to use for more than 180 days or 180 days? Precisely yes. Because if you start counting from 7th July 2020 till 31st March 21, the days are 180 or more. Machine E was acquired as well as put to use on 9th December 20. Machine E is also acquired in my year 2021, but it is put to use on 9th December 20. And if you start counting from 9th December 20 till 31st March 21, these are less than 180 days. Now, can you tell me on machine E, how much percentage of depreciation will be charged? On machine E, how much rate of depreciation will be charged?
Sir, half, so 7.5%.
7.5%, because the normal rate of depreciation of this block is 15%, but machine E is the machine which is acquired during the previous year, and in the same year it is put to use for less than 180 days. So on machine E you have to charge 7.5, half exactly. Now total I have 5 machines now, A, B, C, D, E. In third line what happens, machine B and C were sold for 5 lakh. I sold these machines for 5 lakh, B and C, which are the part of the block. And expenses on sale 50,000. Compute the following. WDV of the block on 31st March 21. Depreciation under section 32 for the assessment year 21-22. WDV of the block on 1st April 21. Ignore the concept of additional depreciation. So since it is the starting in my book, I said in my example that let us ignore for the time being additional depreciation. For the time being, let us learn normal first. So let me start solving it. So now you have this numerical, and let us start solving this numerical. So I'm discussing basically one example from my book, Concept Building Approach, page number 6.7. One example. Now how will I proceed? But I need to check conditions first. Are these assets owned by me? Yes. Are these used for business preparation? Yes. Are these used at any time during the previous year? Yes. Are these tangible or intangible? Machine, yes, these are tangible. Since all the conditions are satisfied, one thing is sure, that I can claim depreciation without any problem. What is the method? As I told you that we have only WDV method in our course. So block is what? Which block is this? Can you tell me which block is this? It is tangible. And within tangible, which block? Machinery and plant. This is a tangible machinery and plant. And fortunately, all the machines are having same rate, 15%. This is what my example is. So WDV is what? Simple. I will apply now this calculation. How to compute WDV. That's it. Rate I'm not supposed to learn because question is directly giving me 15%. Additional depreciation I'm not supposed to apply. And this I will apply in the numerical. So technically all the points will be used. So what is my first step? Let us compute block of asset. Computation of block of asset. This is machinery and plant having the rate 15%. So I will start from opening WDV. What is the opening WDV? The WDV of the block on 1st April 20, because my previous year is 2021. So I'm computation of block of asset is going on. So what is my opening WDV? WDV of the block on 1st April 2020. This WDV is 10 lakh. Add actual cost of asset acquired during the previous year. So which assets have been acquired during the previous year? Machine D and machine E. Machine D is acquired on 7th July 20 and put to use also in the same previous year, 3 lakh. And machine E also acquired during the previous year 2021 and put to use in the same year, 4 lakh. Total 7 lakh. Less sale of assets during the previous year 2021. So which assets have been sold? Machine B and C. So opening WDV was having 3 machines, A, B, C, new D and E. So carefully check that only these machines have been sold, A, B, C, D, E. If other than this any machine is sold, then that is none of this block. So you have to use any other block. So this point I need to carefully check. So I'm selling machine B and C. So B and C are sold. Net sale value. I need to take net sale. Gross sale 5 lakh. Net sale 4 lakh 50. This is what WDV of the block of asset on 31/3/2021. 12 lakh 50. How much is depreciation? Though I need to calculate depreciation first. Can you help me in computing depreciation? How much will be the depreciation for the previous year 2021? Can you tell me how much is the depreciation for the previous year 2021? Any answer? How will you proceed logically?
So we'll first calculate the depreciation on the asset that's been used for less than 180 days on half
Yes.
the percentage.
So normal rate is 15% into half. This is first point, that on 4 lakh rupees, because this is the machine which is acquired during the previous year 2021 and put to use for less than 180 days. So on this machine, half the rate is to be charged. So charge half rate. And then what is the balancing figure now? Can you tell me what is the balancing? Because total is this value. 1250 is the maximum. So on 1250, if I have charged on 7 lakh, the balance left is, if I charged on 4 lakh, the balance is 8 lakh 50. And what is the rate on this? 15%.
15%.
That's it. Now you tell me this value. Calculation. So let us do this calculation. How much will be this?
1,57,500.
157,500. And this becomes my WDV of the block of asset on 1st April 2021, and the chain goes on. 1250 minus 157,500, 1092,500. That's it. So what is relevant for me now? This 157,500. The entire exercise is on calculation of this 157,500. Because this amount I will show in my debit side, on the debit side of my P&L account, 157,500. That's it. This is how I need to solve the numericals of PGBP. I need to compute this point correctly. That's it. Please raise your hand if the concept is clear. Now I have applied the theoretical concepts, almost all the theoretical concepts in this numerical. Any slight problem or any minor doubt, if still you have in your mind related to depreciation under section 32, please ask me in this example itself. Otherwise, please raise your hand if this point is clear. If this example is 100% clear without any slight doubt, please raise your hands. Okay, next point now. Now see, when in my book I have solved the numericals, I have given explanation also. So let me show you that this is the presentation actually. You can see this is how you should present in the exam also. That return on value of the block on 1st April 20, actual cost, total, net sale, WDV less depreciation, WDV. And this explanation you must refer in any book. So the books in which you don't find explanation, then it becomes difficult for you to know the exact reason. Answer anyone can get. Coincidentally also so many times answer you can get, but reasons are must. Like the above block is of machinery and plant on which depreciation at the rate of 15% is applicable. Machine E is acquired during the previous year 2021, and in this year it is put to use for less than 180 days. Thus depreciation at the rate of 15% of the normal rate is applicable on the value of machine E. The remaining value of the return on value of the block on 31st March 21, that is 8 lakh 15, which is 12 lakh 50 minus 4 lakh, will be depreciated at normal rate, that is 15%. It is to be noted that for the purpose of computing depreciation, first preference is always given to those assets of the block which are acquired during the previous year and put to use for less than 180 days in that previous year, during that previous year. So these such explanations will help you in learning so many things on your own. So next point now. Now in the same question, I will start making some changes and I will try to cover all the points. And now you have to tell me the answers yourself. So now let us change this. Not the entire question, only some lines, and then you can see the impact yourself, what the impact will be having when you solve or do the numerical. So assumption 1. So let us start making the changes and then see what will happen. Assumption 1. Same numerical, but so many assumptions. Assumption number 1. Now you tell me, if I make a change, machine E, can you tell me right now machine E is acquired on which date? Machine E
So
acquired on
4
which date?
December 2020.
Machine E, 4th December? Machine E is acquired and put to use on which date right now?
9 December.
9 December 20. Now let me make a change in this date. Rather than 9 December 20, you tell me, if I make this date as 9th April 20, what change would have been there? If I say that this is 9th April 20, what change I would have been? There would have been. Can you tell me in this case now how much will be depreciation? That's it. You tell me this answer only. Think logically and tell. If I change only this date, everything remains same. The date of machine E, rather than 9th December 20, it is 9th April 20. What is the answer of depreciation? Try to tell.
So 15%.
Answer,
Sir,
answer.
1,87,500.
You tell me the amount. Answer 1 lakh.
87,500.
This is the correct answer. Let everyone try to compute and then please raise your hands. How you have computed this amount?
Sir, just by applying 15% on whole amount.
Why you have not charged half rate?
Because sir, machinery is acquired and put to use for more than 180 days.
In that year in which it is acquired. Am I right?
Yes, sir.
So rather than 157,500, this will become depreciation. And the impact of this will be on what? WDV of the block of asset on which date?
Sir, 1st April.
Sir, 1st April. Or 1st April 21. 1st April 21. So the next year WDV opening will become 1062,500. Has everyone understood it? If yes, please raise your hands. Hurry up, try to do it, try to understand it, and please raise your hand. Please raise your hand if this point is 100% clear and there is no doubt in this, because I will make so many assumptions now, so every point must be clear. Please raise your hand if it is clear. Hurry up. Hurry up. Is this point clear? Opening WDV remains same. Actual cost acquired remains same. Sale remains same. Closing WDV remains same. Depreciation amount and next year WDV would change. I hope everyone understood it. Next point. Another assumption now I will make some changes with another assumption. So in every assumption then we will see how the changes will be reflected exactly. Assumption number 2. My assumption 2 says machine B and C were sold for 14 lakh rupees. Right now machine B and C were sold. Right now machine B and C were sold for how much? How much? 5 lakh. But let us assume that these are not sold for 5 lakh. These are sold for 14 lakh. These are sold for 14 lakh. Of course, expenses on sale remain same. Still rupees 50,000. Can you tell me how much is depreciation? Think logically and tell. Can you tell me how much is depreciation? I will wait for your answer.
So 26,250.
Yes, 26,250 will be the answer. Please check everyone. Are they getting 26,250? Only when you say that yes, you are getting to 26,250, I will proceed. And the impact of this will be on the WDV of the block of asset on 1st April 21. Hurry up, let everyone try to check. Then only I will proceed. Let everyone try to check. And if you got 26,250, those who got 26,250, please raise your hands. In every assumption, the answer will change. Or I don't know whether answer will change or not, but concept will change. Please raise your hand, those who are getting 26,250. Hurry up, please. You must try it. Otherwise, if you don't try it right now, you might face some problem at your final level. Next point. I expect that everyone has understood it. If not, then can the moment you made the sale as 14 lakh, so your net sale became, rather than 450, it became 13 lakh 50. So the impact of this was that your closing WDV became, impact of this was, the impact of this was that your WDV on 31st March 21 became how much? 17 lakh minus 13 lakh 50. 3 lakh 50. It became 3 lakh 50. So till 4 lakh, I have to charge half rate. But if my WDV maximum is 3 lakh 50, so maximum on 350 I can charge half rate. Because first preference is always given to those assets which have been acquired during the previous year and put to use for less than 100 days. 350 into 7.5%, 26,250. And WDV of the block becomes what is the WDV of the block now? Next WDV becomes how much? $323,750. Okay, because we will change this value. This value become 13 lakh 50. Closing WDV will change, and the effect will be on the next year WDV. It will be 323,750. Please raise your hand if you have understood this point without any doubt. You must try to understand it carefully. Assumption number 3 now. Assumption number 3. Assumption number 3. Is the answer clear? This 1,421, 323, 750. It is from 3,50,000 closing minus depreciation 2,650. Assumption number 3 now. In every assumption, I will try to change. I will change, in fact, the issues. So base question remains same. Now assumption 3 says machine B and C were sold for 22 lakh. Not for 5 lakh, were sold for 22 lakh. Can you tell me the answer now?
So the written down value on 31 March 2021 will be nil, because of which the depreciation will also be nil.
How the closing WDV is nil? It will be negative. How can you say it is nil? Won't it be negative?
So value of block of assets cannot be negative, thus will only reduce by the amount that we have prior to the sale.
Yes. So if my closing WDV was 10 lakh, I added 7 lakh. Total became 17 lakh. I cannot deduct 21 lakh 50,000. I cannot deduct because the sale value can never exceed the total of this. In fact, it is the actual cost of this block. It is the actual cost of the block. So your sale maximum can be 17 lakh. So I cannot show 21 lakh 50,000. I have to write only 17 lakh. So this makes my WDV of the block on 31st March 21 nil. And if this value itself is nil, then you multiply it by any rate, the answer becomes nil. If it is nil, and by default, WDV on 1,421 is also nil. Please raise your hand if this point is clear. Please raise your hand if this point is clear. So you must note one thing on your previous pages. I hope the screen is visible. Whenever I was discussing this format, you must write something here. When I was discussing this block of asset concept, you must write one thing here about this sale. You must write one point that this amount cannot exceed, if I denote it by A and if this sale by B, the amount denoted by B is less than equal to the amount by A. This B can never exceed A, because if I'm saying asset, then you cannot say that the WDV of this asset is negative. Had it been negative, it would not have been an asset, it would have become a liability then. So if it is saying asset, then you say that the sale can never exceed the total of opening WDV plus actual cost. And here also, I should take net sale. That means sale minus expense. Sale minus expense on sale. And this I'm taking on the basis of Calcutta IT ruling. So it is based on 2010 case. 2010 case of DCIT versus Hindustan Motors Limited. Of ITAT Calcutta bench. On this basis, I am saying that take net sale and not gross sale. So these 2 points you should note where you have written that calculation concept. This is net sale because of based on this ruling DCIT versus Hindustan Motors Limited. ITAT Kolkata bench ruled that I should not take gross sale, I should take net sale, and the total of this net sale, whatever, must be less than the total of WDV opening plus actual cost. And if the points which I have discussed are clear, assumption 4 now. Hurry up, please raise your hand if the discussion is clear. So I'll discuss now assumption number 4. But first raise your hands so that I know whether you are with me or you are behind. Okay, so you are understanding the point. So let us discuss now. Assumption 4. Assumption 4. Every assumption will make the concept of depreciation strong, and then you can attempt any numerical from anywhere. So learn the theoretical concept rather than numericals only. Assumption 4. Now I am using the line all the assets are sold. Rather than machine B and C, main example, base example remains same. All the assets were sold for 5 lakh. Earlier I was saying that only machine B and C were sold for 5 lakh. Now all the assets were sold for 5 lakh. An expense wholesale rupees 50,000, same. Can you tell me the effect now of this assumption?
Sir, no depreciation will be charged.
Why?
Sir, because there is no written down value on 31st March, because all assets are sold.
There is a written down value. You cannot say there is no written down value. There is a written down value, but no assets in the book. That is correct. So opening WDV was 10 lakh. I acquired 2 for 7 lakh. Total became 17 lakh. Sale of all the assets, all 4 lakh 50. So technically there is a WDV. Don't say that there is no WDV. I have a WDV on 31st March 21, and this WDV is how much? 12 lakh 50, but it is notional value only. In reality, this no one is going to give me this value because I have nothing to sell now. So it is notional value only. So make sure, just don't by default multiply the WDV by rate. Check the concepts also. Technically there is no asset now. There is no asset. So if there is no asset, technically no depreciation. So depreciation is nil. And if depreciation is nil, just don't deduct 1250 minus nil. Write WDV next opening also as nil because technically you don't have any assets. So WDV becomes nil. So WDV calculation is not by default plus minus. Concepts are applied. So I can say now note 1. If there are no assets in the block, if there are no assets in the block on last day of the previous year for which you are computing depreciation, that is in my example it is 31st March 21, no depreciation will be charged. No depreciation is allowed for 2021. And because of this, and therefore WDV of this block on 1st April 21 is equal to nil. So just don't deduct this minus this. It will be nil. And this is only a notional value. Technically, if there is no asset in the block on 31st March of the previous year, depreciation is nil. Please raise your hand if this point is also clear. If assumption number 4 is also clear, please raise your hands. So you need to learn the concepts. Don't simply do plus minus. Hurry, please raise your hands if the point is clear. Next point, next assumption. Assumption 5. Assumption number 5. Machine E was acquired on, now see the change. So now I'm making a change. Can you tell me when machine E was acquired in my original example?
9 December
Sir, 9
2020.
December.
Yeah, so now machine E was acquired on 9 December 2019. 9 December 2019, last year. But put to use on 9 December 20. But put to use on 9 December 20. Can you tell me now what will happen? Or let me tell you, acquisition year is what? Previous year 1920. Put to use year is what? Previous year 2021. I am doing calculations for which previous year? Computations for which previous year? 2021. So I am concerned with 2021. Now what is my opening WDV? Don't write anything now. I will make some changes. Don't write. WDV of the block of asset on 1st April 21. 1st April 20. Can you tell me what was the WDV?
So 10 lakh.
10 lakh. Now I acquired asset acquired during the previous year. Can you tell me how much is the asset acquired during the previous year? Value of asset? Only 3 lakh. Because machine E is not acquired in my year. I am computing the calculation for 2021 and machine E is not acquired in my year. If it is not acquired in my year, I cannot add it here. Total, this is one change. Minus sale value. B and C were sold for 4,50,000. Now see, can you tell me on machine E, which is the first year on which you will claim depreciation? Can you tell me in this case on machine E, in which year depreciation will be claimed?
2020 to 2021. Previous year
Yes.
2020.
Why? Why not in 1920?
So because it states that the business should not only be a owner but should also be using the machine to claim depreciation on it.
Assessee should not only be the owner, assessee should put it to use. Do you remember this point? This is my first applicability, used at any time during the previous year. And though I have acquired it in 1920, but in 1920, if I have not used it, I cannot claim depreciation in 1920. I will claim it first time in the year in which you use it. So I'm using it in 2021. So depreciation will be allowed first time. After this, it will be regular. Will be allowed first time on machine E in the previous year 2021 and not in 1920. Now if in 2021 I will allow, and here if I cannot add 4 lakh, how can I charge depreciation? So I will make it as a part of opening WDV. Because here I can add it because it is not acquired in the year. So if you do not add it here, then where you will charge depreciation? You don't have any way to charge depreciation. So make such assets as a part of the opening block of that year in which they are first put to use. So my opening WDV is not 10 lakh, it will become 14 lakh. Total 17 lakh. Less sale. This is my WDV of the block of asset on 31/3/2021. How much? 1250. Now, please raise your hand if till this point there is no problem. Please raise your hand if you have understood the presentation of those assets when the acquisition year is different from the year in which it is put to use. In the acquired second point, I cannot add that value, so I will make it as a part of opening book. Now, can you tell me the answer of depreciation? Can you tell me the answer of depreciation? How much is the depreciation for the previous year, 2021? Can you tell me the answer of depreciation?
So same 1,57,500.
1,57,500.
57,500.
Wrong. 1,57,500 is wrong answer. This answer is wrong. Think logically and compute the answer of depreciation.
So 1,87,500.
Yes, depreciation is 1,87,500. Can you tell me how you have computed 1,87,500?
So because new machinery acquired is only the 3 lakh one, and the value, written down value, is on 1st April. So that would make us assume that.
No. I have not understood your point.
So, sir, like in the first example, we were saying that the machinery acquired for 4 lakh, the E1, is only used for less than 180 days, right? Because it was bought on 9 December 2020. But this time we're including the value of it on 1st April 20 in itself, and not on 9 December 2020, which is why we can calculate
So,
full depreciation.
so what? It is still put to use for less than 180 days. If I'm including this on 1st April 20, but still put to use is less than 180 days. Including it on 1st April 20 is not changing this concept that it is put to use for more than 180 days. It is still put to use for less than 180 days. The reason is to charge half rate, both the conditions must be satisfied. And what are both the conditions?
So it should be
Acquisition
purchased.
year. Yes, Sanjay, you are saying something?
Yes, sir, I was saying the same only. Purchased in that previous year only.
Yes, acquisition year and put to use year must be same. And in this year itself, it should be used for less than 180. The moment these years becomes different, 180 days concept loses its relevance. The moment these years become different, I'm not supposed to then check this 180 days. It has become irrelevant now. I will charge full rate. Half rate only when the 2 years are same, and then it is used for less than 180. The moment these years become different, don't see 180 day concept. It is useless now. That is why I have, so for 3 lakh, on 3 lakh, when I used it, this was machine D. I used it on 7 July 20, which is 180 or more. So there is no need to charge half rate on 3 lakh. And as far as 4 lakh is concerned, though this 4 lakh is used for less than 180 days, but since it is acquired in any other year in which it is put to use for less than 180, I will not charge half rate, I will charge full rate. Half rate would have been applied only on 3 lakh had the conditions been fulfilled for 3 lakh. But since this 3 lakh cost of machine is used for more than 180, or in fact 180 or more than 180, no half rate. So entire amount of WDV 1250 full rate. These things you should remember. So with these assumptions, I'm trying to make all the concepts of depreciation or all the different possibilities clear, and this becomes my WDV of block of asset on 1/4/21 1062,500. Please raise your hand if you have understood the correct reason behind it. Now that is why I always tell you that don't run for the answers. Reasons also you must be knowing carefully. Now please raise your hand if assumption 5 is also clear. Any problem you can ask, or if you are getting confidence now in computing depreciation, please raise your hands. Next assumption. These all are very simple assumptions. and I'm proceeding slowly also, so that the picture becomes clear in your mind. Assumption number 6. Now I'm saying that machine E के पीछे पड़ जाएंगे हम. Machine E was acquired on 9th December 20. In the original example also, it was acquired on 9th December 20. In the original example, it was used on 9th December 20 itself, but now it is used but put to use. December 21, but put to use on 9th December 2021. Can you now tell me the answer? Think logically. It was acquired in the previous year, so acquisition year is what? 2021. Put to use year is what? 21-22. And in this year it is used for less than 180 days. I want to know the answer of depreciation. Can anyone try to tell the answer of depreciation now?
Sir, 1,27,500.
127,500 is the correct answer, but let everyone check. Let us be slow in this. WDV of block of asset on 1st April 20. That remains same, 10 lakh. When you say asset acquired, how much value you will add?
Sir, 7 lakh.
After this, I am adding 3 lakh. Total becomes 13 lakh. Less sale. How much was the original sale? 450. So it becomes 850. Then I will compute depreciation. Will I compute half rate or full rate?
Sir, full rate.
Full rate, because I have added only 3 lakh value, and 3 lakh was used. This was a machine D. It is used for more than 180. So there is no scope of half rate, full rate. It gives you 127,500. So my WDV on 1st April 21 becomes 722,500. But I know that in next year there will be machine E also, which was put to use for the first time. So in this next year, I have to compute depreciation on machine E also, and that is why this machine E value I will not be able to add when in the previous year 21-22. I will prepare this format: opening WDV plus asset acquired during the previous year minus sale. So I will not add in this. I will not be able to add it in. So I should make it as a part of opening block. So here I will add the value of 4 lakh. So technically it is same. 11,22,500. It helps in minimizing the error. It becomes opening WDV, and then the process goes on asset acquired. And when in the next year 21-22 I will write asset acquired, I will not add machine E because it has already been included in opening WDV. So the depreciation is this, and the chain goes on. Please raise your hand if this point is also clear.
Excuse me, sir.
Hmm.
Sir, it is wrong if we add the value of E in asset acquired.
Wrong तो नहीं होना चाहिए भाई. अगर हम एक्ट की बात करें तो wrong तो नहीं होना चाहिए. but I need to carefully check which method is more suitable. क्योंकि अगर एक्ट की हम लैंग्वेज की बात करें तो उस हिसाब से तो इक्वेशन वही होनी चाहिए एज वेयर यू आर सेइंग. क्लियर?
Yes, sir.
अगर हम एक्ट की लैंग्वेज की बात करें तो आप जो कह रहे हैं वही होना चाहिए. When we charge depreciation, we should be little bit careful. That's it. अगर हम आपके हिसाब से बात करें इसमें तो मतलब आप जो कह रहे हैं वो कह रहे हैं 10 lakh and here it should be 7 lakh. Total is 17 lakh. Sale 450. This becomes 1250. But when I charge depreciation, I should be careful. I should not charge on 1250. I should do the calculation like this. 850 into 15%, which gives me 127,500, and it becomes 1122,500. So I think this is what Prem you are saying. In this way I should do.
Yes, sir.
हाँ ये भी हो सकता है और ये ज्यादा सुटेबल लग रहा है क्योंकि जब मैं एक्स की लैंग्वेज देखता हूं तो वो ये बात करते हैं एसेट एक्वायर्ड और एक्विजिशन मशीन ई की तो इस ईयर में हुई है. डेप्रिसिएशन नहीं लगा तो क्या है, हुई तो है. ये पॉइंट एक बार मुझे और थोड़ा डिटेल में चेक करना होगा कि व्हाट इज द एग्जैक्ट प्रेजेंटेशन. ये चेक करना पड़ेगा. इट्स अ गुड पॉइंट. इस तरह से मैंने भी कभी ध्यान दिया नहीं इस पॉइंट में, पर ये चेक करना पड़ेगा एग्जैक्ट दैट विच प्रेजेंटेशन इज ओके. इज दिस करेक्ट और इज दिस करेक्ट? इन दोनों में से एक ही ठीक है, ये तो श्योर है. Either what Prem you are saying that will be correct or what I have said is correct. So इसके लिए फिर अब वेट करो आप. If I'll get some time, after some time I will see and then I will get back to you. Answer of calculation is same, but yes, we must know what is the exact way of presenting such questions when any asset which is acquired in 1 year and put to use is in another year. How we should do the presentation. Till I get back to you, you follow my method. Till I get back to you, you follow my method. Till I get back to you. But it can be wrong also. So that clarity will take some time. I will refer the act again and we'll get back to you. What is the exact way to present it? So till I tell you which one is correct, you must follow what I am saying for the timing is correct. That if the asset which is acquired in 1 year and put to use is in another year, don't write it in this category asset acquired. You make it directly as a part of that year opening block in which you are going to charge depreciation. Is the issue raised is clear and is the clarification which I am giving for the timing is clear? If yes, please raise your hand. But in both the cases, answer of depreciation doesn't change. So please raise your hand if the issue raised in the class is clear and what is my clarification on this point if that is clear. So you must understand the problem which is there in such questions and the presentation. So please raise your hand if you have understood the point. आप में से कुछ हो सकता है जिनको पता ही ना लगे कि हो क्या रहा है ये इसमें. In case you have not understood depreciation point, so you might not be in a position to exactly tell that what issue was raised. In case you have understood the issue, please raise your hand. But issue is genuine. It requires more clarity for further debate and discussion. So for this you need to give me time. I will get back to you after reading it. Exactly what is the way of presentation. For the time being, till I get back to you for with clarity on this point, what you must do is, in case there is any asset which is acquired in 1 year and put to use is in another year, then in that year in which it is put to use, you make the cost as a part of that year's opening WDV till I get back to you with the clarification. Next assumption. Now do remember one thing. In my original question, I was using one line, ignore the additional depreciation. Just for simplicity, now I will ignore that line. Is this screen still visible? Is my screen visible?
Yes.
Yes, sir.
Okay. See, in the main question, there was a line which was used, ignore additional depreciation. That is why I didn't charge additional depreciation, though every time I have purchased a new machine D&E, but I ignored additional depreciation. So same ignorance followed in assumption 1, I didn't charge any additional. Same ignorance followed in assumption 2, I didn't charge additional. Same ignorance was followed in assumption 3, I didn't charge additional. Same ignorance was followed in assumption 4, I didn't charge additional. Same ignorance was followed in assumption 5, I didn't charge additional. Same ignorance was followed in assumption 6, I didn't charge additional. Now, but in assumption number 7, I will not ignore additional depreciation. So what is my assumption 7 now? Think carefully and listen carefully. There is no such line in the original question. Suppose there is no such line. In the question, which line? Ignore additional depreciation. So that means you are not supposed to ignore additional. If it is available, give it. Now I'm not ignoring additional depreciation. For the purpose of simplicity, in first 6 assumptions and in the original question, I ignored this. Now I will not ignore. That means if it is allowed, I will give. Further, let us assume in the same assumption, assessee is into the manufacturing sector. Assessee is doing the business of manufacturing. Further assume machine D and E are new. Further assume I have not opted for optional taxation scheme. I have not opted for optional taxation scheme. Why I am assuming these things? Because all these things are necessary to make sure that additional depreciation will be given. For additional depreciation, you must be a manufacturer. Yes. Machines are new. Yes. These are installed or acquired on or after 1st April 2005. Yes, because these are acquired in 2020-21. So of course it is on or after 2005. I have not opted for optional taxation. That means I can claim additional depreciation if it is available. And yes, it is available. How will I do now? What is my opening WDV now? What is my opening WDV? 10 lakh. Machine A, B, C. Acquired B and E. B was acquired for 3 lakh and E was acquired for 4 lakh. Can you tell me which is that machine which is acquired and put to use for less than 180 days?
Sir, E.
Yes, it is used for less than 180 days and acquired in the same year. It is for 180 or more. So half the rate will be charged on 4 lakh. So I'm getting back to my original question, where only additional depreciation I will apply new 17 lakh minus sale. Sale of which machines? मैं भूल गया हूँ मशीन क्या. अच्छा ये तो D and E है ना. Sale B and C. B and C were sold for 4 lakh 50 net. This is my WDV of the block. $12.50. Now let us charge depreciation. First, what is the normal depreciation? Can you tell me what is the normal depreciation?
Sir, 1,57,500.
On 4 lakh, I will compute half rate. And on remaining depreciation, remaining WDV, 1250 minus 4 lakh, 850, I will compute full rate. So how much is this value? How much is this value?
Sir, Sir, 1,57,500.
Yes, and I told you that additional depreciation is altogether different. So now, how much is additional? Can you think that how much will be additional depreciation now? Can you tell me additional depreciation?
Sir, 10% of actual cost.
No. 20%. 10% is only when the asset is put to use for less than 180. This is also new. So on 3 lakh, into 20% plus on this 4 lakh, since it is put to use for less than 180, into 10%. Is this clear? So it becomes 60 plus 41 lakh. This is the total depreciation which will be deductible in the previous year 2020-21, and this is what my WDV of block of asset on 1/4/2021, and that will be how much? $992,500. This is what the concept of additional depreciation, and the process goes on in the next year. Please raise your hand in case the point is clear. So with this, I have cleared the concept of additional depreciation also. Please raise your hand if it is clear. Last assumption, I think we should take a rest now, but I'm showing you the screenshot of my book for last assumption that you can do yourself. This is the last assumption. I have given you the solution also. Please take the screenshot of this assumption, assumption 8, and with this your depreciation concept is 100% clear, except this clarification which is raised in this lecture. So for this I will get back to you later on to clear that confusion. Please take the screenshot of this page which is on your screen right now, and please raise your hand if you have taken the screenshot. It is on page 6.11 of my book. Those who are not referring to my book, please take the screenshot. Hurry up, raise your hands if you have taken the screenshot. Hurry up, please. Hurry up, please, those who have taken the screenshot. So with this, now depreciation calculation is over. Last point, which I will discuss with you later on, but since it is related to depreciation, I want to keep it pending, and let me tell you this point. What is this point? I will discuss this later on. So my last heading was, if you remember, I discussed two main subheadings of depreciation: applicability and method of calculation of depreciation. All these were part of method of calculation of depreciation. So practically two headings I have discussed: applicability and method of calculation of depreciation. So now this is third heading, C point. What if depreciation is not fully adjusted? What if depreciation is not fully adjusted in any previous year?
Sir, are you sharing your screen?
Yeah, of course. Is it not visible?
No, sir.
Oh. So yes, the moment you think that I'm writing something and it is not visible, you should inform me. What if depreciation is not fully adjusted in any previous year because of insufficient profits? This point I will tell you later on. What is basically this point? Now you just tell me, if it is my P&L account, my sales are 70 lakh, my office expense is 72 lakh. Can you tell me what is my net result? Can you tell me what is my net result?
So 2 lakh loss.
So I will write 2 lakh loss. Wait, 2 lakh loss, 100% correct, no issue. So this 2 lakh is in the Income Tax Act. 2 lakh I will call it as loss under the head PGBP. I will write it as loss under the head PGBP. I'm assuming that this P&L account is prepared as per IT Act. So loss under the head PGBP. But suppose I say that 70 lakh is my sales. Office, sorry, not office expense. Depreciation is 72 lakh, which I have computed as per which section? 32. Can you tell me what net result I will write? Net loss? What I will write? Can you tell me what I will write? Any answer what I will write? Or till you know the concept, what you should write? Suppose you don't know the concept. Suppose you don't know this C point, what you would have written here?
Net loss 2 lakhs.
You would have written here net loss had I not told you C heading. But now you must remember that I will not write it as net loss. When it is depreciation, depreciation is very precious expenditure for the assessees. It has its own identity. I will not write net loss. Do you know what I will write? I will write depreciation only 70. And now PGBP income is neither positive nor negative. And I will say it as unabsorbed depreciation. Depreciation has its own identity. If it is not fully adjusted, it will not be merged as a business loss. Office expenditure lost its identity. The moment in any year it is shown on the debit side, if not fully adjusted, it lost its identity and it will now in future be known as PGBP. All expenses which are on the debit side, if not fully adjusted, they will lose their identity, and in future all the expenses on the debit side of P&L account will be known by the name loss of PGBP, but depreciation will not lose its identity. It will still be known by its own name. It will be known as unabsorbed depreciation. So there are 3 expenses only in the entire PGBP which will not lose their own identity. What are those 3 expenses? One such expenditure is depreciation under section 32, and 2 other I will tell you later on. They will not become a part of business loss. Only that much which can be adjusted, they will be adjusted. Pending if remains, they will be having their own identity under Income Tax Act, and they will in future be called as unabsorbed depreciation. So other 2 are also there, which I will tell you later on. I hope the concept is little bit clear. I have not yet told you the exact treatment of this point, but I gave you an idea that what I wanted to discuss in this point C. That's all from my side. Thanks for your patience. Today we have completed a main concept, depreciation. Goodbye. Those who are having any doubt, they can stay and ask. Otherwise, goodbye for now. They can stay. And that's all from my side for today. Goodbye again.